on to talking about the W-4 form and how we calculate withholding for those W-4 forms that are issued, that were filled out in 2019 or before. So I had mentioned that, we, in addition to having two ways of calculating our federal income tax withholding, that wage bracket method and the percentage method, we also have two different W-4 forms that the employees may have filled out and are using. Now, the vast majority of employees are using the 2020 and later form, the one that we've already gone through in great detail. Okay, so most employees are using that. However, there was no requirement when the tax law changed and they came up with this new W-4 form. There was no requirement that employees update their W-4 forms unless information had changed on it. Like, if no information had changed, like they were married before and they're still married, they kind of filed in the same manner before that old W-4 and nothing really changed, there was no requirement that they update those forms. So as a result of that, there are still employees that are using this earlier W-4 form. That number is going down every year, and I've looked up, I don't see like any date that they're grandfathering out the old form, and it just adds additional complication for our purposes, but we need to take a look at it and see how it works, because those W-4 forms are still out there. So what we have, these are those 4 minimum pieces of information that we needed when we calculated withholding using that newer W-4 form. Remember, we needed the taxable wages, how frequently was the employee paid, what's the filing status that they indicated on their W-4, and was that checkbox checked or not. With the old W-4, we still need to know taxable wages. So this will be the same information. This doesn't change. We still need to know the frequency of pay, which again, this doesn't change. But now we don't need to know the filing status. Instead, what we need to know is the marital status, which is different from filing status. Marital status is simply, are you married or are you not married? Yes, that's one of the two. We got a 50-50 on that. So that is indicated on the W-4. I'm going to go through the old W-4 here in a second. And then we also need to know what we call allowances. And this is something that is also on the W-4 form. And I'll talk to you about what those allowances are and what they mean exactly. It's kind of a strange concept, and it pertains to old tax law. By old, I mean before 2018. So let's take a look first off at the old W-4 form. And you might actually like this because it's a lot shorter. It's easier in some respects. So this is it. So remember, the other one was the whole page. This is like the bottom third of the page. The employees withholding allowance certificate is how they refer to it. All right. So we've got all the employee information up here: name, first, last name, social security number. That's pretty standardized. Here, instead of filing status, you can see we have 3 boxes. One is single, one is married, one is married but withhold at the higher single rate. So you have 3 choices. If you're married, you would either check married or married but you want to withhold at the single rate. The single rate means you're going to have more withholding. You're going to have more taken out of your paycheck. So for those individuals who want a bigger refund, or they're going to owe more money at the end of the year, they've always owed more money, they could choose to have more withholding at the source, and even if they're married, they can withhold at the single rate. If you're single, you have one choice, and that is single. So there's no head of household, there's no married filing separately, there's no qualifying widow or widower or any of that stuff. It is just single or married. So that's the marital status over here. That's where that comes from. Line 5. Total number of allowances you are claiming from the applicable worksheet on the following pages. Okay, so there's a supplemental worksheet that employees would have to fill out in order to determine the number of allowances that they're going to claim. Now, what the heck are allowances? Well, in the olden days, 2018 and before, or actually before 2018, so up to 2017, I think, we had on the tax return, so the 1040, we had these things called exemptions. This was a type of deduction. And what a deduction does is it lowers your tax base. It lowers your taxable income. It doesn't directly lower the tax, but it lowers that base. And remember, our base times our rate is going to be our tax. So the lower our base, the less tax we're going to pay. We would get one exemption for each person on the tax return. So, if you're married, that's 2 people. If you have 3 children, that's 3 more people. 3 children who are dependents on your tax return. If they're on the tax return, you would get one exemption for each of those individuals. For each exemption, you would get, as of the last year that the exemptions were used, the amount was $4,300 per exemption. So, if you've got 5 people on your tax return, you're married with 3 children, 3 dependent children, you would have 5 exemptions times 4,300 equals, what is that, 21,500. You would get a $21,500 deduction, which reduced your tax base. So if, let's say, your taxable income, or your total income, say total income, it's $100,000. You would get, you're not going to pay tax on all of that $100,000. You get to first deduct your exemptions. So that makes your taxable income lower, your base. This is 88,500. So now instead of being taxed on $100,000, you're taxed on $88,500. There were and are other types of deductions as well, but that's really for covering in the income tax class. But these allowances mainly pertained to the number of exemptions that you were going to claim on your tax return. Pertains to some other things as well, other factors entered into the calculation, but for the most part, it was related to these exemptions. So if you take a look at the worksheet, which is here, this is your personal allowances worksheet. You can see, you can enter 1 for yourself. Enter 1 if you're married filing jointly. So there's your 2 people. Enter 1 if you will file as head of household. So this did take into account the different tax rates, the lower tax brackets for head of household status. Enter 1 if you're single or married, filing separately, you have one job. Now they're talking about, do you have more than one job or not? So kind of related to that question, that checkbox question on the new W-4. Then there are questions about the child tax credit. Are you going to be claiming the child tax credit? You get to enter 4 for each eligible child. So that's where it's taking into account the child tax credit, which also relates to the number of children that you would be claiming on your tax return. If you're claiming some other credits, you would also get additional allowances. You enter all those allowances in, total them up, and then you pop that number here. You'll see when we do the calculation how this factors in to reducing the tax base. Well, we changed the tax law, we don't have exemptions anymore. We no longer use this deduction on the income tax form. And so as a result, the allowances that we're claiming really don't relate to current tax law. So every time tax law changes, and you saw that when we looked at the 2026 W-4 form, hopefully you guys remember that, the worksheet is more complex, the deductions worksheet is more complex because we've got some new factors entering in with regard to how certain wages are going to be taxed. That no tax on tips, no tax on overtime. Also, there's an additional deduction if you're over age 65 that people are going to get. Those are all temporary, by the way. I think they're only for like 3 years. And there are limits on how much you actually get to claim, how much you can benefit from it. But that's because every time the tax law changes with regard to wages and how wages are taxed, the W-4 is going to change as well. So we've had a couple of big changes. One happened in 2017. This was not updated until 2020 though. The new W-4 wasn't updated until 2020, so it took them a couple of years to get that change made. It's not taking them as long to do this next change. But that's where the allowances come from. So the next line simply says, additional amount, if any, that you want withheld from each paycheck. We've got that line on the new W-4 as well. Or if you are exempt, that same qualification for being exempt applies on this, but the new W-4 form does not have a space for you to write exempt. You just write it up at the top. Here, there was an actual space to write exempt on the form. So, one other thing I want to point out with regard to the allowances, and you'll see when we do some examples how this works. So the number of allowances, when we have more allowances, we have less withholding. When we have fewer allowances, we have more withholding. Because each of those allowances reduces our tax base and reduces the amount that's going to be withheld. So a lot of individuals would just choose to have 0 allowances because they wanted the most withheld. They wanted a big refund at the end of the year, or for whatever their motivation was, and they would just say they have 0 allowances. Well, obviously, you're never going to have just 0 allowances because you've got to enter at least 1 for yourself. The IRS does not care if you have more withheld. They're fine with that. You could claim fewer allowances than you're entitled to, but you are not allowed to claim more allowances than you're entitled to. So that was an area where people and employees would get into trouble if the IRS suspected that they weren't having enough withheld. They could ask to then look at the W-4 form and compare it with what their reality was. So, for example, if they had 1 kid, but they were claiming that they were going to have, that their child tax credit, that in this spot they had like 3 kids considered. Well, then you have committed perjury on the W-4, and this is also an area where the IRS can prosecute and can institute fines, and all sorts of bad things can happen if it's filled out. And this applies to the new W-4 as well, by the way. You sign it under penalty of perjury. So if you know you're not entitled to these allowances, but you claim them, you could get in trouble for that. All right, so let's take a look at how this works. Any questions about allowances? Is that pretty clear how that related to the old tax law? All right, so with the 2019 and earlier, so remember, we've got our 2 methods for calculations. We've got our percentage method and our wage bracket method. We have the same 2 methods when we're using the old W-4. Calculations, the worksheets are a little bit different though, because we've got 2 different factors that play in, okay? And I think you'll actually find that the worksheets are a little bit easier than the others. But, so we've been using wage bracket method for 2020 or later, percentage method for 2020 or later. Now we're going to look at the wage bracket method for 2019 or earlier, and the percentage method for 2019 or earlier. We're also going to take a look at this automated payroll systems method. You'll see that how they name this here, this is for manual payroll systems. Which just means you're doing it by hand. But then you've also got this automated payroll system method. The results are the same regardless of which one you use, but you've got some homework problems that ask you to use the automated payroll system, so I want to go through that as well with you. So let's take a look first though at the wage bracket method for manual payroll systems 2019 or earlier. This is your worksheet. It's 4 lines. That's a lot less. So, line 1A, enter the employee's total taxable wages this payroll period. So let's put something up here. Let's say, I'm probably gonna end up putting this over there, but oh well. Let's say we've got taxable wages of $6,000. And we are paid semi-monthly. Marital status, we'll say we're married. Remember, it's just either going to be married or single. We're married, but we don't want withheld at the higher single rate. So we're going to do the married status. And we're going to claim 4 allowances. So on our W-4, we claimed 4 allowances. All right, so using that information here, enter the employee's total taxable wages this payroll period. All right. So 1A is $6,000. 1B, we get to use a table again. Actually, this is a bad number because this is going to be too high. So just like with the, I'm going to make this smaller so that we can actually fit it on the table. Just like with the newer W-4 method, if we're using the table, the wage bracket method uses tables. If our income falls off the table, we can't use the wage bracket method anymore. Also, if the number of allowances that the employee is claiming does not fit on the table, we can't use the wage bracket method. We have to use the percentage method. But so let's make sure, I want to make sure that we can fit on the table. All right. So $3,000 is the taxable wages. Now we're going to look at the table. We're going to find the amount on the table. Okay, so you can see we've got weekly payroll period. So just like with the other tables, right at the top is how frequently are you paid. Okay, this is semi-monthly, so we don't want weekly. We want to find the semi-monthly tables. guys. There's bi-weekly. Bi-weekly. Okay, here we start with semi-monthly. All right, there are two tables here. There's married, and then there's also single. We want the married tables because we are married. If we were married but we wanted it withheld at the single rate, we would use the single tables. Okay, so there's only two for each frequency of pay, there's two tables. All right, so we're married. Same setup. Over to the left is our income range. So if we find our income, all right, so our income is $3,000. Same applies. We're going to use the second line down. So $2,950 to $3,000, but this is less than $3,000. We don't want that. $3,000 is not less than $3,000, so we're going to use the second line down. $3,000 to $3,050. All right, so here's the line that we're going to use. And the column that we use pertains to the number of allowances that were claimed. 0 up to 10. If they claimed 11 allowances, we can't use the table. We have to use the percentage method. So they claimed 4. So right there is our column. So $176. That's our tentative amount to withhold. Now we're going to go to part 2. Back up. Figure the final amount to withhold. Enter the additional amount to withhold from line 6 of the W4. We didn't have any additional amount to withhold, right? So this is 0. 2B, add lines 1A and 2B. Well, we have nothing there. So this is 176. Easy peasy. So this, obviously, there's less to calculate here with these, with regard to the wage bracket method. It's probably a little bit simpler using the 2019 and earlier method since we've only got 4 lines on this worksheet. We're going to take a look as well at the percentage method. Any questions about this? So again, probably the most important thing is making sure you're on the right table, right? Weekly, married. A little further down, weekly, single. And then we'll get to bi-weekly married, bi-weekly single, semi-monthly married, semi-monthly single, and all of those tables in there. All right, any questions? Okay, now we're gonna look at using the percentage method. So now I can change this to 6,000. We'll still say semi-monthly and all that. We'll use 6,000 now. I'm gonna need a little bit more space. Push this out a little bit. All right, so if we're using the percentage method tables, this is our worksheet. It's still shorter, still a shorter worksheet than using the new, the 2020 or later W4. But there are a couple of different different factors that enter into this. You see these numbers up here based on frequency of pay. This will factor into our calculation. So let's go through these step by step. 1A, enter the employee's total taxable wages as payroll period. 6,000. 1B, enter the number of allowances claimed on the W4. 4 allowances. Multiply line 1B by the amount in table 7 for your pay frequency. This is table 7 up here. So you go across to find the pay frequency, 179 times the number of allowances. This is going to be the adjustment to our base. We're going to subtract this total amount from our taxable wages. That's what reduces our base. So you can see how if this were 10, we'd be reducing our base by a much bigger number. So the larger the number of allowances, the lower your tax base, the lower your tax withholding. So we've got 4 times 179, 716. Subtract line 1C from line 1A. We have here 5284. So now that's our tax base. That's the amount we're going to apply. Here's our adjusted wage amount. Step 2, figure the tentative withholding amount. This is exactly the same procedure as we did with the percentage method for the newer W4. Okay, so exactly the same thing. So find the row in the percentage method table in this section in which the amount on line 1D is at least the amount, yada yada yada. We're going to enter the amount from column A of that row. Now you will find, so we've got to look at these tables. They look pretty similar, but notice on the left side is not a checkbox or a non-checkbox, right? That's what we used for the newer method, was the checkbox. Now we don't have a checkbox now, so that doesn't enter into the equation. Now we have to find the payroll period that applies. So this is semi-monthly, and on the left is married, on the right is single. So this person is married. The range, income range here, 4608 to 9056. There's the row that we're going to use. So they want us to use, so 2A, we have to enter the amount from column A, 4608. If you recall, the next step is to enter the amount from column C. So 452.14, that's our tentative amount to withhold. 14. Step C, I think, is the percentage, if I remember this right. Yeah, next one is the percentage, which is 22%. Step 2D, subtract line 2A from line 1D. Okay? 84 minus 4608. $676. Step E, we're going to multiply that by the percentage. 676 times 22%. $148.72. F, we're going to add those two together. 452.14 plus 148.72. $686. Now, if there was any additional amount to withhold, we would enter it here. There isn't, so this is just the amount of withholding, $600.86. We don't have to take into account any tax credits because that was part of the calculation that the employee made when they entered the number of allowances on their W-4. So it's already been taken into account amount with that number. I'm going to show you another way of doing this that I think that automated method, this is the manual method. We also need to go through the automated method for this calculation. And you'll see we're going to come up with a very similar, close to the same number. But I want to go through it because your book, I know you've got at least one problem where your book asks you to use the automated method. Okay, so I'm just going to write this down here. We're going to use the same factors. 686. Are there any questions on this procedure? Again, just use the worksheet. That will take you through it. Now let's look at the automated. Percentage method tables for automated payroll systems. This is also how it's done for withholding on pensions and annuities. Be careful here because there's two worksheets. I kind of screwed this up in the last class. I started using the wrong worksheet. You want to make sure you're using the employer's withholding worksheet, because that's for wages. The second worksheet is for pensions and annuities. You'll see that's the payer's worksheet because they're not an employer, they're a payer. So let's go through this. All right, step 1A, enter the employee's total taxable wages as payroll period. 1A, 6,000. 1B, enter the number of pay periods that you have per year. And you can use the table if you can't remember, but I know all of you can remember. If we are semi-monthly, we have 24 pays in the year. Multiply the amount on line 1A by the number on line 1B. We are annualizing this pay. So 6,000 times 24 pays, 144. All right, so there are two different options here. If the employee has a W-4 for 2020 or later, you use these steps. I think your homework problem is 2020 or later, so you would use those steps, but because I'm showing you the 2019 or earlier and I want to compare it to what we came up with here, we're going to use the 2019 or earlier method. But just know, be careful there, that you've got, if your problem says it's a W-2 from 2020 or later, you're going to use steps D through I. If, however, they have not submitted a W-4 for 2020 or later, we're going to use steps J, K, and L. Okay, so we'll use that in this case.
Excuse me,
yeah.
When you say not submitted for 2020 or later, do you mean that they had one from before, or do you mean no W-4 at all?
Well, they shouldn't not have a W-4.
That's true.
Yeah.
Sometimes it does happen, so I was curious.
Well, it shouldn't ever happen.
Okay.
Yeah. So if they have not submitted a new W-4, right? They should have if they don't have any W-4 on file, you get them a 2020 a new W-4 for whatever year you're in. That's what you get them.
Is that also required when they come up with a new? Because they'll come up with a new one eventually. Is it required to redo your W-4?
So they have not required this new one to be submitted unless there were changes.
Okay.
Like they weren't married before, but now they're married, or the number of allowances would have changed. There was no requirement that employees submit new ones. Some employers did require their employees to submit new ones, and that was fine. But there was no requirement to do so, and that's why we still have these kind of hanging out there.
W-4.
Yeah, and I mean, really, they need to just put an end to it and say, you gotta submit a new one, but they haven't done that yet. And maybe they will, like with the new 2026 tax law, maybe they'll make employees submit new ones, but there's been no requirement for that, as of now. Now, if you have an employee that has claimed exempt, that they are exempt from federal withholding, they have to do that every year. So any employee who is claimed exempt should have that new form, should have the 2020 or later, right? So let's go through, so just so you know, if the problem says they do have a new W-4 form, but they want you to use this method, then you're gonna have to do these steps 1D through 1I, okay? But we're gonna assume that they haven't submitted one because we're using our allowances, and we're gonna use, if the employee has not submitted a W-4 for 2020 or later, we're gonna do these steps. So enter the number of allowances claimed on the employee's most recent Form W-4. That's 4. There's our allowances. Multiply that line by 4,300. Remember I said that the last time we had exemptions, it was $4,300 per person. That was the amount that was on the tax form. That's where this comes from. So 4 times, 4,300. I guess it's what? 17,200. Subtract line 1K. I'm sorry. I put 2 here. I'm sorry. I got my numbering wrong. This is actually 1J. L. Subtract line 1K from line 1C. So we're going to subtract this from this. So 126.8. Now, here is our adjusted annual wage amount. Now we're going to look at the tables. We're going to do basically the same thing, but these tables are based on annual wages, not per pay. All right, so again, you would enter, so 2A, we're just going to enter this here, 2A, 126,800. Find the appropriate annual percentage from the percentage table. Find the appropriate amount. We're going to enter the amount from column A of that row. All right, so we are married filing jointly. Now it says up here, use the left-hand side. Use this if the W-4 is from 2019 or earlier, or if the form W-4 is from 2020 or later and the box was not checked. So, okay, since we've got a W-4 from 2019 or earlier, we're going to use the left-hand side. We're going to find the appropriate filing status here. So we're married filing jointly, and then we're going to find the range, at least 110,600, but less than 217,350. All right, so there's our column or our row that we're going to use. So the amount from column A is 110,600. Using my ink here. Gosh, these things dry out so quickly. Now this is where, be careful that you're scrolling up to the correct table or the correct worksheet. This is where I screwed up in the last class. Enter the amount from column C and then the percentage as well. So column C, 10,852. D, E, the percentage is 22%. Oops. DE, subtract line 2B from line 2A. Okay. 126,800 minus 110,600 equals, what is that, 16,100? Is that right? 16,200. Multiply the amount on line 2E by the percentage. Okay. F, I'll come back up here to F. So we'll take 16,200 times 22%. $35.64. FG. Add lines 2C and 2F. So 10, 852 plus 35.64. $14,416. That's our annual tax. Last step here, divide the amount on line 2G by the number of pay periods. So H is 14,416 divided by 24. $667. Now, if it were a W-4 from 2020 or later, we would take into account the tax credits if they had any that they were claiming. If we have any additional amount to withhold, that's in step 4. We would enter that. We don't, so this is the amount. So, automated. Questions? All right, so those are our two, the difference between the 2020 and later, 2019 and earlier, W-4. In your homework, again, read it carefully as to which W-4 is being used and which method they want you to use. Some of the problems I think will not indicate use the percentage method or use the wage bracket method, but you're just supposed to know which one you can use. And remember, the percentage method, you can use that with any amount of income, any amount of allowances. There's no restriction on it, but the wage bracket method is easier. All right, no questions? All right, we will, on Tuesday, we'll go through Iowa withholding, how that works. And that will finish up chapter 4, and then we'll start on chapter 5 as well. Your homework is due next Thursday night. So your chapter 4 homework is due next Thursday night.